Hello, welcome back again to my channel. Today I want to give you guys lower time frame entries, because a lot of people have been asking, lazy, you promised us. Okay, today I want to share maybe 3 or 4 or 5 lower time frame entry strategies, that is on the 5 minutes, possibly on the 1 minute. So this is volatility 75 index. So assuming we want to trade this with one of those lower time frame strategies I promised. So considering this is, let's just leave this like this. So now we expect a pullback into somewhere nice here. So one of my strategies in one of my videos, I showed you how to pick spots, like from here to here. The black candles are supposed to touch, but this, so if you decide to pick like 50% of this to be around this, extend it like this, that's a spot. This could have been a spot too. This place to here, as those are the possible areas price can pull back to. But look at the price pull. No, I mean it has to touch the body. Please watch my videos, you will learn a lot. I treated this in one of those videos. If this there's a form of handshake that's supposed to happen between the two candles and things like that. So I wouldn't want to go into all that, because the reason for this video is just to show you lower time frame entries. So any of my my strategies, once you pull back to those sweet spots, you can always use any of the strategies. So let's just go straight to that. Let's leave the other parts of it. So assuming this is the sweet spot you are aiming for, this is price coming here. Let's pretend as if this has not happened yet. So let's just mark it like, let's say price got to this spot, price just touched the marked area we were hoping that price will come to. So this is the 1 hour chart. Let's just go to our 5 minutes chart. So like we said, let's pretend as if price just got here, all this has not happened. So now on a 5 minutes chart, you bring in an indicator called zigzag indicator. It is on mobile MT5, desktop MT4 and MT5. I'm not sure if it is on MT4 on mobile. So let's bring in that indicator. Okay, so look at the indicator. So we have it. So what you will look for is you let price touch this. Once price touches the sweet spot, that is that spot you want. Now you start looking for a break of the lowest high. If it is in the opposite direction, you look for the break of the highest low. But for this particular one, we are trying to look for a buy, so we look for the break of the highest, that is the lowest high. It happened here, but this place has not touched our zone that we marked. This is the box that we marked. So you always have to wait for the price to enter that box, touch the box, then you start looking for the break of the lower high. So at this point, price broke the high here. This is a high, this is a lower high, this is a lower high. It was this one that price broke. After touching, let me zoom out so you see what I'm saying, because I don't want you to get it wrong. The pullback happened here, and it touched. It didn't, as at the time there was a break above the low here. Price has not touched this box. So you have to wait for price to touch the box. Once it touches the box, then you start looking for a lower high that price will break. It doesn't matter if this low is lower than this one or lower than this one. What you are interested in is the high, and this is where the high was broken. Please follow the instructions properly so you have the results you so desire. So once you have a break above the higher high and the lowest high, not the lowest, the lower high. Once you have a break above it, then you put in your box. There's the box, yes. Then you apply the box to the black candle before the breakout candle. This is the breakout candle. This is the black candle. If it is 2 candles, you mark the entire 2 candles, you extend it. And bear in mind that as at the time we are doing this, maybe let's pretend price has not come back here. Price is here. So you mark it. Now look at what happened. Price came here, put back here, try to onto your stop like they always do, but did a higher high and touched the right spot. And what happened after that? Price bought. So let's go to the 1 hour chart and see what transpired at the end of it. So let's remove our zigzag indicator and see what happened. This is where we are. We planned on this. Price came into that box, our sweet spot, and we entered on the lower time frame. And look at what happened after our entry. Price bought. That is one of the strategies. Please, if you don't follow that good or you didn't get it, please watch the video over again. This is just strictly for lower time frame entries. I don't want to waste too much time on it. Let's go to the second strategy of a lower time frame entry. Okay, for the second example, using the same VIX 75 index. So now let's assume or let's pretend price just came back here. There's a pullback. After this, price came back here to our sweet spot. So you dive down into the 5 minutes chart. Okay, let's do it like this. Let's start from here. This. Okay. There's a way I draw my trend lines. There's a video about it. If you've not seen that video, please go and watch that video. Because the conventional way the trend lines are, the highs and lows are drawn on previous videos you've seen. I wonder who taught those guys. So this is me drawing. The video is there, so let's just watch the video. You'll know why I'm drawing it like this. I'm plotting my trend lines like this. You would have done this as price moves, not when you are ready to enter the trade. You would have done this. This accurately marks the highs and lows, even better than zigzag indicator. That's a funny thing. If you don't know what I'm doing, please go and watch my video on how to properly draw a trend line that brings out the exact highs and lows on a chart. Okay, I think we should be good like this. So once you have this on your 5 minutes chart, you have to wait for price to touch the sweet spot, that box you've created on your higher time frame. Then you look for a break above the lowest high. This is a break, but mind you, price has not touched this place yet, so this is not useful to you. This is a break. Don't mind if one low is not up to the other one. What you are concerned about is just the high. So this is a break, but price didn't close on top of each other. There was no higher high formed, and mind you, it has not touched the sweet spot you marked earlier. You have to actually wait for price to touch your box that you've marked on. That is the area, the zone you've marked on the higher time frame for your entry. Once price has touched the plate, that is when you now come back here and look for a break of the high. So from this now, price touched it here. So if you want to look for a break of the high, this is the last high, the lowest and the last lower high. So if you put your trend line on it, look at what happened. There was a break above it and price created a higher high. So once you have a break, once price touches the your sweet spot on the higher time frame, you now look for a break of a lower high. Now we have that break, higher high was created. If you have just a break, a candle close, that is nothing. You need a higher high. So once you have a higher high, you now mark the last candle, the last opposing candle. It was red candle that broke this high. Then you have to mark the black candle. The black candle is your entry zone. So look at it. The lowest high was broken. The higher high formed on top of it. A higher high must form on top of it. That is a compulsory thing. You have to wait for a higher high to close above it. So you now mark the black candle. It could be 3 candles, it could be 2 candles, it could be 1 candle. You mark the entire candle. That is your zone for an entry. You're on a lower time frame. So once price comes back into that your box, you take your trade. It doesn't matter if it is a retest or a pullback, that is the zone for your entry. That is where you pull the trigger. That is, look at it. If you mark it, look at it, that same place. And your stop will be somewhere like this. You're on a lower time frame, so you have your stop at the bottom of this place. That is your stop. So if you go back to the 1 hour chart, look at your entry, that blue spot. Let me zoom in. Let's remove this, we don't need this any longer. So look at it, that blue box is your entry on the lower time frame. And this is your stop. Look at what happens. Price moves up. That's a buy. That is strategy number 2. Strategy 3. Let's go to strategy 3. Let's go into the 5 minutes. So the leg, let me mark the leg so you don't get confused. Let's pretend price, this has not happened yet. So this leg, it's coming, this leg that pulled back. Because let's pretend this is where price is. Let's just pretend price just got to our sweet spot. Maybe you've done the analysis. This is where you feel price is coming to, and you marked that box. So now you go into your 5 minutes chart. So in your 5 minutes chart, this is the leg. This is the leg you're trying to monitor. So simply what you just zoom on where this leg is you bring this pullback, you simply bring in a regression channel indicator. Let's bring it in. Regression channel indicator. Let me show you. Okay, let me show you where it is here under your channels in the indicator section. Regression channel, not STD channel, not standard deviation channel, not equidistance channel, regression, RC, regression channel. You bring out the regression channel and plot it. This is how to plot it. This leg, this dot, you make sure the lines rest on the highest candle here. That is the beginning of that pullback leg. Then you pull it down to the last candle. This is the lowest point of this move. So you put it on that lowest candle. The first candle to the lowest candle. Let's go back to the one out so you see what I'm saying. You pull it from the first candle, that is the red. Let's remove this. So you pull it to this red. That is the last candle there. You can either pull it from 1 hour chart, you fix it on 1 hour chart, or you go into your 15 minutes chart, your 5 minutes chart to go and fix it there. So make sure you adjust it properly. Make sure it is on the last candle. This black is the lowest candle. That's the candle that has the lowest wick and the candle that has the highest wick. See, this black is the candle with the highest wick. That is your highest candle. So then you extend the line. Extend the line, or you can use the indicator itself as its own extension, right? Then you extend it. You can use the indicator line, or you can use your manual let me adjust it. I don't like the indicator extended line. It makes the chart rough a bit. So once you've extended the line manually, let me change the color so you don't get confused. So you extend the leg so that it sits in properly. So the rule with this regression channel is we have 3 trend lines, 1, 2, 3. The 3 blue lines are the regression channel lines. You need price to break above that line. So when you extend your regression line from the highest to the lowest on your pullback phase, because once you have price break above it, you mark the candle, the opposing candle. It was the red candle that broke the line. You mark the black candle. That candle on this chart is my own sell candle. So the buy candle is the candle that will break above and create. There has to be a higher high if there is a break above, not just a candle close. You wait for a higher high to form, then you mark your box. So once you mark the box, let's pretend price just got here and you mark the box. Look at where price came back to. Then they entered your stops, but still a higher high, and they touched that box. And from that box, let's go back to, this is where you enter the trade. This is where your trade entry is. Once you have a breakout, this is more like a wedge pattern. Let me show you on the 1 hour chart. Let's look at it. You have a pullback and we are trying to enter. So it's more like a wedge pattern for people who trade wedge or know about wedge. So let's go back in. In the red channel, you only follow the last line. Last line. That is, so the full pull. The thing is, look at it here. If you are following it, you place your trend, your regression channel line here. there was a break outside it. If you extend this line, there was a break outside this, but your price has not touched this place, so this is useless to you. That is why you move your regression line again to this place. And if you extend this line, there was no breakout, and even price hasn't touched your red box. So it's only when price touches your red box, you put the line, you adjust it to the lowest, that is the black. Price has touched the place, then you wait. So once you have a breakout above or below, depending on the model, if it is a sell or a buy model, once you have a break above, the last opposing candle for my chart, my black is the sell candle. So the sell candle is what I will mark, since I'm looking for a buy and price came back there. So imagine price was here, pretend price was here, and price came back here, and you clicked and you pulled the trigger here, and your stop loss was maybe somewhere decent. Let's go to 1 hour chart and see what happened. Look at it, look at what price did. The channel, the regression channel, I like it because it shows you where exactly your entry candle is. It's about the easiest I've seen in all these lower time frame entries. That makes the third lower time frame entry. Let's go for the fourth one. We are still on the 1 hour chart. So in the lower time frame, since you have price already in that your sweet spot, I just bring in a moving average. As simple as it may sound, I just bring out a moving average. That is, let's check out the setting. Just normal simple moving average. 14.0. Please, you can pause the video and what, or you can take a screenshot of it. It could be linear, it could be simple, but I prefer linear. So 14.0 linear with close, that's all. 14, even average 14. I just put it on it. So once I have my candle in, that's my spot. I always look for a break above the last high I had before I touched the box, which is this. From here to here, there's no low, except you want to follow the 3 consecutive candle rule. Some people apply it, I do apply it. So let's look at it in 2 ways. If you want to look for an entry like this, you can just simply, this is the last high before you touched that distance, just put a trend line. Let's say price was just here, all this has not formed, so you just put a line above the last high you have. You see, the moving average duty is just to help you plot the highs and the lows. So once you place a trend line above it and you have a break above it, that is a close and a high forms above it, one of the strategies you can just easily look for, bring out your Fibonacci tool, then from where the price got to the lowest point of the price to where the price broke this thing, then once price pulls back to your 50%, you enter your trade here. So this could have been where you enter your trade. Entry strategies should not be something you have sleepless nights over. It's not a big deal, it's just a means for you to enter the market reasonably with the aim of having a lower time frame entry is just to reduce your risk. That is it. It's not something big or something spectacular. Just reduce your risk. So this is where the 50% spot is. And assuming you entered here, let's look at it. Assuming you entered on this small box, look at the price, but simple as ABC, nothing. Okay, let's look at the second option. Still using this same moving average. Let's remove the box. Let's move this. So this is the last high. This is another high. At times in Forex, once you have a break below a moving average and you have maybe a break below a trend, you know, the moving average is more like a trend line. That's another topic for another day. So there's this rule, like if you have a 4 consecutive candle break below a trend line or a moving average, once the candles close appropriately, like second candle is supposed to swallow the wick of the first one, the third one is supposed to swallow the wick of the second one, the fourth one swallow the wick of the third one. That is regarded as a lower low at times. So if we follow that rule, this is a high, this is another high. Doesn't matter if this leg gets below this or not. Once you have this is a high, this is a high. So if you want to look at it that way, you put your trend line above it like this. Assuming I'm the one about to take this trade, this is what I'll use. I'll use this because I'm familiar with it. Consecutive candle closes, and once the candle closes appropriately the way it should, I'm very sure this is a low. And funny enough, look at this again. There's another higher high, there's another high. So this itself, it's another low. That is how funny Forex can be at times. This itself, it's another low. But let's leave that for another day. So let's just look at this. This is a low, and it did what? This is a lower high, and price broke above it. And once you have that, always remember that the candle that breaks above the opposing candle is the entry spot. So you just mark it like this. That is the entry. Let's go to the 1 hour chart and see how well we did. And once you have that, you can observe that most of our entries are falling into the same area, the same area. That is the way Forex is. Once you have the key to it, Forex is not difficult. It depends on the patience and the understanding you have for it. That is why some people are making money, most people are losing money because they fail to learn, or probably the people teaching them are just wasting their time. So let's go in for the 5th strategy. So we just dive into our 5 minutes chart. This is the regular strategy, which is very simple too. All we've been doing since, different strategies I've been showing you, is just the same thing. It's just a break of the lowest high. That is just it. Once price breaks the lowest high, it will pull back to a reasonable place after that break and take off. Every strategy you come across is the same. It's just about different approaches towards it. So let's just do something like this. Let's start from somewhere. Let's just mark it. It is the normal strategy for everybody. So let's look at it like this. Yes. Yeah. So this, you mark your box. You mark it. This is a high. This is a high. This is a high. This is a high. Okay. This is. Mind you, I'm marking on diet to show you where it got. This is the leg that got broken. This leg got broken. This leg got broken. So for this strategy, we believe this is a high, this is a high, this. And so what we are looking for in this same strategy, like we did in every other strategy, is just we are looking for a break of the high. We are looking for a break, something like this. Just something like this. Because considering this is a high, all these are highs. This is a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. That kind of formation. So at this point, this is a lower low. Let me zoom in so you see what I'm saying properly. this is a lower low, this is a lower high, a lower low, a lower high, a lower low, a lower high. Unfortunately enough, price broke this high here. Broke the high here. That is what we are looking for in this lower time frame entry strategy. It broke it here, but the sad thing is it broke it and it couldn't make any difference, because this is our zone. It is this zone, inside this zone we are supposed to take the trade. So price broke this high here, but it was useless to us, so we still wait. You can only trade a break of a high once price touches your sweet spot, that is your zone. So for this now, for this is the last high that was created before price touched this place. So you simply put your trend line here like this. You can see the similarities in the strategies now. It's the same thing. All the strategies are just the same. It's just the approach. This is so once you have this is the high and price breaks this, price will come back into the zone. So if you use your Fibs, your Fibonacci tool, just target anything from the 50% and enter. Look at this. So once price gets to your 50%, you can pull your trigger or if you're someone like me, I'll mark the highs to the last listing. So I'll still call this, once, because price has touched this, I'll still call this a high. And once price breaks above it, I'll just mark. Let me rephrase that. For me, I'll just mark this place and put a box. I'll mark this, put a box, my entry box, at the opposing candle before the candle that breaks the high. This is the candle that breaks the high. It's the same thing. But in some strategies, they don't believe this is a high. They simply just believe in this form of triangle. This is, should I call this? I can't really call it a triangle, but they believe this part has to be lower than this part. They are right. I'm right as well. The aim is just make money. So once you have a break of this, you pull out your Fibs, or you look for the last pullback before the break. So if you want to look at it now, this qualifies like sort of qualifies for a pullback. So you just do this. Let's remove this. There's something I want to tell you guys. So at times, this too is another strategy. You just look for a break. That's it, the last pullback. If you want to look at this is not the last pullback. This is the last pullback. Because if you do this, my trend line strategy, as well, I'm telling you guys, I'm so used to it. I can even see it without trend lines. I can see those micro movements without trend lines. Now I was just saying something else and I saw it. Look at it. This is a pullback. So on normal grounds, this is the last pullback before this move that broke. So now that you have this, simply just do what? I'm telling you, Forex is very interesting. Once you get a hold of it, you see some things, you just laugh. You just look at them. You just look at it. This is the last. And if you want to plot your box, your box is supposed to be the candle before the break. So since we are looking for the break of the last pullback before this, so please tell me, have we not been marking the same thing since? We've tried 5 different strategies and it has resulted in the same thing, the same spot. So when you now zoom out, look at it. We entered here, price went. So let's go to our 1 hour chart and see what happened. We've been doing the same thing, different methods. Is that not the same place we've been entering since? Five different strategies, and it's coming up to the same thing. So look at the highs and the lows we marked. So this is the 5th lower time frame entry strategies I've shown you. So please watch this video several times. Choose the easiest strategy for you. I always like strategies that you don't have to do much. Just maybe plotting an indicator to just mark the spots for you. Just wait for it to get there, or you just plotting the trend lines, and just simple things. I think you guys should have at least like a minimum of 3 strategies you can always use now offhand. So at this note, I would say thank you for managing me till the end of this video, and it was a pleasure indeed showing you guys this. Please comment, ask questions if you have questions you want to ask. Click the notification bell so that you get notified once I come up with videos like this. Please subscribe to my channel, make your boy grow. I really need it. So on this note, I'll say bye for now. Thanks.